Mark, what are the tax implications when my spouse dies?
Okay, so if your spouse has left the assets to you, then there's not much of an issue. They roll tax-free. However, if they've left them to your children or other family members, it could be very complicated because there's something known as a deemed disposition of your assets.
Now, what about the deceased? They have to make a final accounting to the taxman, don't they?
Correct. So there's something called a terminal tax return that goes from January 1st to the date of death, and that's filed April 30th like your regular tax return. However, if you were to pass away between November to December, you get 6 months from that date. So the CRA is sympathetic to the fact that your final tax return may require lots of work.
Now, what tips can you provide me to make that final tax return signed, sealed, and delivered over and out, and I don't have to hear back from CRA ever again about my deceased spouse?
Well, it's not quite that easy. It would be very important you want to ensure every asset your spouse has is reported somewhere. But the way you get out of that is there's something called a clearance certificate that the executor can file with Revenue Canada, and Revenue Canada gives you the okay on their tax affairs once they complete the certificate.
Do you specifically ask for the clearance certificate?
Yeah, the executor would typically ask for a clearance certificate, and once Revenue Canada reviews a clearance certificate and feels everything's okay and all taxes are paid, basically you're okay with that estate.
And then you're over and out, you're done?
Yes.
Great, thanks Mark.
You're welcome.